Okay, why become a trader? There's a lot of good reasons. Money's a good one. But money is a problem too, because money is, if you concentrate on the money, and if you have to make money, then you're going to, the emotions are going to come into it. There's going to be fear and greed and denial and revenge trading, where you hate a company so much you're going to trade till you get your money back. There's a lot of that going on right around now too. Good reason, no. There's no boss. There's no 9-to-5 routine, so it's a lifestyle decision. There's no retirement age. You can live and work anywhere in the world. It can change your lifestyle, and it can change it while you're still working. As you'll see as we go through tonight, the information that I give you is created for people who have real jobs, who come home in the evening, download the data, look at the charts, make a decision, and react the following day. So you don't have to sit in front of a screen all day in order to be a successful trader. You can have a job, and you can supplement your income while you're working. Here's the key: thrill of creating a trading model and making money using your brain. This is what the professionals concentrate on. In other words, and it's a rule-based trading strategy where you have a set of rules and you follow the rules, and if you follow the rules, then you're going to have what we call a success rate of 50% or better. That means half the trades are good and half are bad. And if you think about that, and you're only right 50% of the time, but you have a profit-loss ratio of 2 to 1 or greater, meaning that you have small losses and the profits are twice as big, we're going to make money. And what you're going to find is that it's not difficult to get to around the 70% success rate. And with the profit-loss ratio, it's going to be around 3 to 3.5 to 1. So we're going to have a good profit-loss rate. So if you have this system, this rule-based trading strategy, the byproduct is you're going to make money, which means you're not focusing on the money, you're focusing on the system. Create the system, and then you're going to test it. And if it doesn't work, you're going to go back to the beginning. You're going to have a set of companies. That's why I'll talk about my book in a second. But I have 5 years worth of companies that I've traded in the newsletter. So when I want to change something, I can go back over those 5 years of all of those companies, and I can go through them, and I can change it, and I can see if I would have made more money or less money. And that's one of the beauties of having the book that I did last year, which is 110 and 10, and this year it's 111 and 11. Those 111 companies, we can work out at the end of the year exactly how much money they made. Because I've given the first day, you can create your little spreadsheet, and you can have the last day. You then can go back, and you can apply my system to it and see how much you would have made. You then can change something in my system and go back to the beginning and go through every one of those and work out how much you made if you had this one change in the system. And that's how you actually build on your system, by having the same group of shares that you go back over time and again to do your testing on, your back testing. Okay, super funds underperform. That's probably the reason why a lot of you started to get involved with actually taking control and having your own self-managed super fund and trading your own account. Because the fund, one of the problems with fund managers is that they're fundamental analysts. And I don't have a problem with fundamental analysis. It's just that it doesn't stop there. We need to combine fundamental and technical.